In mid-2026, the fintech sector is prioritizing the construction of rigid, regulated systems over the experimental AI models of previous years. This shift is driven by a massive influx of capital into data governance, the integration of digital assets by traditional networks, and a tightening circle of regulatory oversight. In this landscape, technical innovation is tethered to institutional security and compliance. The immediate challenge for agentic AI is reliability. Autonomous software agents require verified financial data rails to prevent the execution of hallucinated or unverified workflows. Daloopa secured a $47 million Series C to build infrastructure orchestrating auditable financial data for AI. Simultaneously, Catena Labs raised $30 million to develop programmable banking rails for AI agents and filed for a national trust bank charter to govern these automated activities. For these firms, the priority has moved past the AI model itself towards securing the data the model acts upon. Legacy payment networks are establishing their position in the digital asset space by adopting high-level regulatory compliance as a core product feature. MasterCard Transaction Services recently secured a BIT license from the New York State Department of Financial Services to expand its blockchain payment and custody operations. New York remains one of the most stringent regulatory environments globally, making this approval a high bar for institutional entry. This move provides a compliant bridge for Web3 merchants to access fiat liquidity, signaling that digital assets are becoming standard in cross-border networks. Regulators are now distinguishing between legacy partnership models and companies that build their own compliance stacks. The OCC recently issued a consent order against Community Federal Savings Bank, marking a crackdown on traditional bank fintech sponsorships. In contrast, Mercury raised $200 million at a $5.2 billion valuation to accelerate its move to an active, natively licensed national bank. The current market dictates a choice for fintechs: secure a full native charter or face the operational limits of third-party compliance. Financial automation requires a foundation of strict regulatory compliance to scale. To track this, monitor the upcoming enforcement phases of the EU AI Act, which will establish the rules for AI-driven financial infrastructure. Finally, observe Q2 earnings from major payment networks for the first data on revenue generated through these newly licensed digital asset strategies.